Welcome viewers to another Crypto Unplugged video. Doc here, and I'm joined by Oz. And in this video, we're going to be talking about what happened yesterday with Bitcoin and the altcoin market, and talking about whether this crash is going to be lasting for a while, talking about the major S&P 500 and how the macroeconomic factors are actually affecting that. And also, we're going to be discussing some of your questions that you've been asking on Twitter. And also, we're going to be giving some analysis on some of your favorite altcoins as well. Now, before we start, viewers, make sure you subscribe to this channel, smash that like button, and spread the word. Oz, what's happening?
Yeah, it's been a busy old couple of days, especially on Twitter with the crazy liquidation run that's happened all over the world, to be honest. And still sticking to the analysis, looking at the markets, and I'm still going strong.
Yeah, Oz, because look, yesterday, since actually a few days, we've seen the S&P 500, okay, drop quite significantly, okay, and that's obviously caused a major effect. The Fear and Greed Index at the moment is 17, okay, and Bitcoin has come down significantly as well, and we've seen major drops. So, for example, Bitcoin has just come down, it touched 49,000 yesterday. So, Oz, look, the question is, are we into another crash? Is this the beginning of a bear market? Is there panic around the world? What's your take on this?
Yeah, look, at the end of the day, we've had panic in the markets in Japan, and then went to America. But for me personally, I know the news is important. Don't get me wrong, it is important, but I focus on strictly I focus on charts because I can't control the news, but I can control my actions regarding the charts. And when I see bearish things happening, then I can quickly adapt. If it's bullish, I continue to sticking to the plan. So for me personally, what do I think? Now, obviously, I got levels on this chart, right? And I'm going to talk specifically about TA and not much about the news. If you like news and sort of that sort of stuff, there's plenty of YouTube channels and crypto Twitter macro so-called experts that talk about the news. That's not really what I do. I'm looking at the charts. So I have these levels, right? And these levels for me, the monthly levels are so key in terms of where Bitcoin's going to go. And I have one of the levels which is the NPOC levels, right? So they come at 67,000, at 52,000, one at 36,000, and then one again at 26,000. These are the main levels that are open and tradable on the charts. Now, for me, that 52,000 level is so important, and I said that during the when all that stuff was happening yesterday. The 52,000 NPOC level, losing that on a monthly scale. So I'm not saying about losing it tomorrow or losing it for a day and things like this, because what tends to happen is that you do go under the NPOC levels, you touch them, and then sometimes you fake them out, and then you come back to the top, just like what we had here. If you look here in when we broke 70,000, it was a fake out of that level and all the way back down to the next one, which is 52,000. Also within the FVG gap. But regardless of this, so we've come down. Now, if we start rejecting this level, and in August we're below 52,000, I will have to turn bearish, and obviously that's something that I don't want to do, but it's just what will happen in the charts, regardless of the news. Because if we start rejecting 52 and come below this green FVG level, then sadly I think we will be going to 36,000 as a minimum, and I think then you're really struggling to continue the bear market. Then the left translated cycle was extremely early. Even I didn't think it was going to be that early, but that's the bearish side. But that hasn't happened. August is still, we're in the beginning of August. We stay above the NPOC level here. We stay above the FVG level, or within it, but above the NPOC. Then the target will be 67,000. And I think this time, the amount of time 70,000 has been tested, this time it will break, and I think we'll get a massive run up into the wave 5 Elliott wave count as well, which I'm currently that you guys who are watching, my count in Elliott wave. I think we're in the wave 5. But yeah, that's just my take on what's happening at the moment.
Yeah, interesting, Oz. Particularly when you're looking at the NPOC levels, okay? You're looking at the highs, okay? And we're talking about the fake. And you got your NPOC level at 66 and some change, and right now at 52,000 roughly. And of course, that Bitcoin did come down 49,000, but this does usually happen. But look, For the benefit of our viewers, Oz, okay, there's two particular factors or two issues that you did mention, but let's take them one by one because it's important to clarify what these levels mean. So, what exactly, if you could break it down, is an NPOC level?
Yeah, so these are basically naked point of control, which means the highest trading volume for the month. So if we look at this one at 66 or 67,000 almost, right? So this happened in July. So this level in July, 67,000 was the highest, you can say, trading volume around that level, and it was the strongest level. So if we're below it, it's going to be acting as big resistance, and this is a monthly level. You have to understand that as well. So what we have here for this month here, and these are open levels, these haven't been tested. Once they're tested once or twice, I normally delete them. So generally I should normally delete this not this July one, because this hasn't been tested, but each month they create one, and once they've been tested once or twice, I normally delete them because they're not as strong anymore. So if we look at this one here, which was actually created in February, so this 52,000 NPOC level, highest trading volume in February, was created back then, and only now it's been tested. So February, what we got, March, April, May, June, July, August, it took 5 months to test this level. This one's open again, the one that was created in when was this created? November 2023. And then we got this one that's created in September 2023. These are the two open levels that are still, that could be tested, and I think they will probably be tested, but in the bear market, that's my opinion at the moment. The next bear market probably be tested. So what I'm trying to say is the highest trading volume happened around 52,000. We've tested it. Now, next month I'll delete this level because it's no longer relevant for me. This is why it's very important to stay above it, because the next time if price does come down, let's say in September, and we're below it, this is not going to act as a strong support anymore, and we'll probably go down to that 36 level. So that's what the NPOCs are. They're the highest traded, you can say, volume for that particular period of time. And the time that I've selected for these ones are the monthly. You can do daily, you can do weekly, but monthly is very good for longer term outlooks.
Okay, now Oz, look, something very interesting happened with regards to market sentiment, because the thing is that we can't really discount how important sentiment is. Particularly you talking about your YouTube videos and your analysis are very informative, and a lot of people, they look at this analysis and they go away and do their own research. But sometimes sentiment, and we've seen this exactly, where people look at sentiment and they measure it according to fear and greed index. And today, Oz, on the back end of what happened yesterday, we saw the fear and greed index, extreme fear at the moment. It's like 17. Okay, and that's quite significant, would you say? And you mentioned something, when you're talking about NPOC level, and another indicator regarding sentiments as well. You discussed something like FVG gaps. So, looking at the fear, extreme fear, the fear and greed index, and FVG gaps. I mean, for the benefit of our viewers as well, how would you, break this down?
Yeah, so the fear and greed index, I think, is obviously when you come at 17 and everybody's thinking that the world's going to end, it's so bad. It's normally a good time to buy, because you want to do the opposite. If you don't know TA, and I keep saying, you don't need to know TA, and if you think this stuff is complicated, just look at the fear and greed index. When it's in the teens, it's normally a good time to buy. When it's in extreme greed area, 70s, 80s, normally take your profits. And that's the most simplest way I can explain the fear and greed index. And any guy or any person can look at that. They can look at that, and they can, to be honest, they can just trade off that. Now, the FVGs are a bit more complicated. They're a bit more complicated, but what they normally mean is three candles. So let's just take the latest one. So you got this candle, this candle in January, this candle in February, and this candle in March. So once there's a wick here and there's a wick here, so as you can see, there's space. So there's no overlapping wicks. So as there's space, that means there's imbalance. So there was too many buyers there. In this example, if it was a bearish, it would be too many sellers. So there's an imbalance here in the market, and the market needs to fill that back, which is done after 5 months. And what I normally do with FVG gap is I get my FVG fib. I do it from the three candles from the bottom to the top, And normally when you come into the 6.2, that's the ideal buy zone for this FVG. Now you might be thinking, look, there's an FVG here, there's one here. Why isn't it come back? The thing is, they don't need to come back into each of them, so it's not like they're gonna always retrace into them. So that's something you have to bear in mind as well in analysis. But with what they mean with the FVG gaps, especially when you got NPOC inside an FVG gap, which makes it all the more powerful, is that they are basically, you can call them zones where the price has gone too fast and now it needs to rebalance. So now it needs to offer some, basically it needs to fill, or half it needs to fill to give an opportunity for the market to rebalance. So that's what these gaps are. And we have, and these gaps I think will remain unfilled until the bear market. Most gaps always get filled back. Just remember that. In a bull market they come back, and a lot of them do get filled. Not all of them, but a lot of them do. And I think these ones will get filled back in the bear market. But if we start going below, like I said, this 52,000 area for August, then we could be in a bear market. But obviously, I don't want to scare anybody at the moment. I'm still bullish the way the charts are looking, and that's what I was saying yesterday. In one of my tweets, that if you didn't have a plan, for me, the plan was simple: below 52,000, rejecting it, okay, and you see that pattern, okay, we're turning bearish, especially for August. So my plan was the monthly. Let's just relax, take a deep breath. You don't need to make any rash decisions, and so that's where we are at the moment.
Okay, Oz. Now, before we continue, viewers, we've got a treat because Oz is going to be looking at some analysis of your favorite altcoins that have been requested through our social media channels. But before you do this, make sure you do subscribe, like this video. You've got a bell notification there. Make sure you click that so you don't miss any content as well. Now, viewers, we're going to look at some altcoins, and we've got 3 particular altcoins for you. So first of all, Oz, we've got a massive render community, a lot of people who are supporting render. Okay, so give us your take on analysis on RNDR.
Yeah, so with render, and I gave an update about this before, where I think $4 area was a good buy. So I've gone into more detail in render, and what you'll see is the gap here. Okay, so this is an important gap to hold, in my opinion. And then you have the NPOCs, the monthly NPOCs at $4.50 and at $4, which we hit both of them, and at the moment a beautifully held up price. Now, looking at all of these fair value gaps, right now I've taken them from the bottom, from basically 40 cents all the way to the top, because we've got 1, 2, 3, 4, and then you might think, which one is it going to retrace into? So the way I look at it, discount is below 0.5. So anything below 0.5, it starts to get, you're in discount levels. So because render, remember, it went to $14. So when you're coming in 50% off price, from bottom to top, it starts to become a discount. And I think once you hit below 6.2 into this NPOC area, I think this is just an estimation now. I think the month, if it's bullish, will close inside this fair value gap, and then that would lead the price on to, in my opinion, about $30 for render. In that next leg, I think it's fair to say that we can get around $30 going up. But yeah, so for me, the first thing would be, let's close inside this fair value gap at $5. So we're not too far away from that, but this is still it's a long month to go. But the way it's looking, if Bitcoin continues its way up and we don't break $52,000, render will probably follow up, and it will close into this fair value gap area. Obviously you got the lower levels, and if Bitcoin does get to 36,000 or below, then you've got the lower levels at $2 and at $1.70, but then there's a long way back, and from by then you would have seen the market anyway. So for me, render still bullish at the moment. Good monthly candle. Let's close inside the fair value gap, and let's head on to like $30 or so. But I'll give it, when it comes closer to target giving time, I'll give my targets for render. But I think it's about $30 at the moment.
Yeah, thanks a lot for that, Oz. Now we've got a couple of others as well for you viewers. Okay, we're going to be giving Oz is going to be giving his analysis on one particular meme coin. Now, I think you can see that on the tab, but do stick around until the end of the video because this is something that I personally am interested in listening to your take on, Oz, and it's a token that I selected just looking at yesterday. But let's look at the everybody's favorite subject, and that's meme coins. And of course, one of the most trending topics or one of the most trending coins on the meme coin space on Twitter at the moment would be PEPE. So give us your take on PEPE and what are potential good entry points.
Yeah, so again with PEPE, coming from the top, we've had this fair value gap in this spot here. We've had the NPOC monthly, at 0.882. That's been hit. The one at 6,995 has been hit. So for now, for me, again, it's similar to render sort of in that sense where I want to see it close in this area, and then we can, we have resistance at 1185, and then we can carry on up. I don't expect it to hit this fair, to be honest, this fair value gap. That's, we're starting prices, you're looking at a whole altcoin capitulation worse than you've ever seen in your life if that happens. And if I do get from the
Yeah.
FVGs, let's just see. So we got one. Let's just put the FV. I don't use a standard fib for FVGs. I have a FVG fib somewhere here. So again, this is coming to the 6.2, which is from top to bottom, it's acceptable. Obviously, you got the 7.9 here. But what I like is the NPOCs with the FVGs. That's, and the fibs. So I want to see it close above the 0.5 at the end of the month, and then I'll be very bullish on PEPE, and then we can start getting a lot higher prices, and maybe from here, PEPE's a high market cap. Maybe another 5x from here, 5 to depending. But memes are crazy. It's hard to estimate exactly where they'll go, but yeah, I just want to see it close inside this green area for this month, and then I'll be very, very bullish on PEPE. You have got another area at 7.9, but there's not an NPOC here as well, so it's kind of a weaker level for me. But let's see anyway. That's my analysis on PEPE.
Okay, Oz, and one of my picks, okay, is Origin Trail TRAC. Okay, and this is something that is interesting. It's a fantastic project. We've spoken about this many, many times, even in the last couple of videos back and on a podcast as well. But Oz, give us your take on TRAC.
TRAC is kind of easier in the sense where we're in between two resistances, right? We got the $1.20 monthly level. We got the 50 cents, and then we got this NPOC. Okay, and we've come into it. Personally, I'm not gonna lie. I would have liked it to go a bit lower to the 6.2. That's my ideal range. I don't think it would get to the 7.9, but anyway, in here we have gone to and we didn't really break this low, so it would have been nice, more confirmation. Would I say, wick it all the way down, come back up. You have a swing failure pattern, basically, which means the sellers weren't strong enough to hold down the buyers into the FVG monthly area, reclaiming the NPOC, and then we're on our way to something like $3 or $4. But still, at the moment, as long as we're above 51 cents, I am bullish on TRAC. And if we can get a little target for TRAC, if we can say that's let's put our other fib on this, and let's see entry exit. I think it's that one. Yeah, we could be looking at around $3 at that next area. That would be a good profit taking area for TRAC. So yeah, so that's my take on TRAC. As long as about 50 cents, DCA around here, 41 cents would have been great. We didn't get it. Okay, fair enough. We might still get it. Let's see. But yeah, bullish on TRAC. I'm aiming for $3. Bull market continues, aiming for $3 to $4 in this next leg up.
Okay, so look, we've got another 25 days or so until the monthly close. So, make sure you do look at this analysis responsibly and do your own research. Oz, thanks a lot for giving us and the viewers your analysis on what's been happening. Okay, and viewers, make sure to continue us providing this content. Like, subscribe, put on the notification bell, and see you guys in the next video.